We have a panel discussion now where we're going to discuss the financial and economic landscape in Southeast Europe, in Romania and the wider region. So let me introduce all our speakers one by one, and there's quite a few. I think we've got 8 on this panel. So first of all, let me welcome Robert Kalman Raduly, Secretary of State at the Ministry of Finance of the Government of Romania. Please join me on stage.
Hello.
Good morning.
Morning.
Welcome and have a seat.
Thank you very much.
Sergei Stanishev, former Prime Minister of Bulgaria. Welcome, Sergei. Alexandru Nazare, President of the Paneuropean Union of Romania, Board Member of the National Bank of Romania. Yes. Welcome.
Hello. Good to see you again.
And in dialogue now with our business representatives, Omer Tetik, Chief Executive of Banca Transilvania. Morning.
Good morning.
Georgios Athanasopoulos, Chief Executive of Vista Bank. Welcome, sir.
Good morning.
Paul Dieter Colanaru, Chief Executive of CITR. Welcome. Mihail Ion, Vice President, Capital Markets, Investment Banking and Personal Financial Planning at Raiffeisen Bank, Romania. Welcome. And Ionut Lianu, CFA, Chief Treasury and ALM Officer at CEC Bank. Welcome. Okay, take a seat, gentlemen.
Morning. Sure. Come. Color football.
Okay, well, welcome everyone. Great to have you here. And there's quite a lot to discuss, so I think we should get straight into it. We've got until about 11:15, 11:20 when we'll have a break, so we've got plenty of time. I think everybody's got about 5 minutes to make some introductory remarks, and then we'll open it up to maybe some Q&A and a conversation. So first of all, Mr. Raduly, would you like to start us off?
Yeah, thank you. First of all, I want to thank you for our presence here. Maybe we can take a boat because we are 8 plus 1 and we can compete in Oxford-Cambridge traditional race together because definitely we are in the same boat. We can say, gentlemen, we are in government or in
floating.
And the boat is float. This is our life. Let me introduce. Let us go 23 centuries ago, and then Archimedes had asked for a lever long enough and pivot point to move the world. And I think in the last 5 years, we got also the level long enough because we have a pandemic period long enough. And now we have also the pivot point after the US election. We have an interesting one, US administration in force. And we can change the world is unstable by itself. If I want to say to you yesterday's story about instability in the financial world. Years ago, my family make a deposit on a year term in a bank. We don't was asked, and our bank changed to another bank. And yesterday, when my wife took out the money because at the other bank, if you took out the money on the day of the term, you can took out at 0% tax. We pay 0.9% of tax. It's a stable or an unstable. It's a certain or an uncertain word. I just ask you, it's a fair or a moral or unfair or unmoral issue. Why I told all of this to you? Because the government are usually accused, especially when we change the fiscal legislation, we are unpredictable, we don't respect the predictability things, but not just the government do the same. But I see we maybe are in a doorstep of a chaos, a short-term chaos. What the U.S. Administration say and do today can create a short-term chaos. And as you know, after the chaos, the unstable things look like stable one. And maybe in half a year or a year, we will be in the same situation like today, but we don't talk about it's unstable. We will say, oh, it's good, it's stable one. I prepare just some numbers for today, because in my opinion, a few numbers say much more than 1,000 of words. And you can say in Central Europe, what is the situation? Or I can explain myself what is the situation in an area belonging to Stalin in Yalta, when in 43 some guys put some percentage in a paper and decide the situation in our country and the neighbor country, even in the Baltic countries, since we can say today. And it's, I don't know, it's a little bit small. I don't know if everybody can say the numbers, but the figure is that Romania has the more lower government revenues on GDP percentage, and even we have a low government expenditures in the other side. But it's a massive difference between our revenues and our expenditures. This is the situation of Romania today. It's maybe a little bit delicate than in Bulgaria or in other countries with the same path like us in the last decade and a half. And by sure, to have some kind of structural reform in Romania is quite mandatory. But as we talk about stability, we don't talk just about economical stability. We talk also about political stability and social stability. And as you know, Romania is not quite stable politically today. Not in the government side, what happened in the society, and what can happen in May in the election can create maybe some kind of chaos also in our country. For us, for the current government, the biggest challenge is to preserve the political stability in this country, and with the political stability can also be stable in social and in economical way in the next months and years, we hope. This is our main message today, and this is our main perspective today. We live in a high global economic uncertainty, and we're looking for macro-financial stability in these conditions. It's a huge challenge, not just for Romania, and a huge challenge also for the whole Europe, because we can say the Europe and especially Brussels live in some kind of bubble in the last decades. And now we have a strong wake up, and we are in front of the reality. We are weak in order of our defense. We are very weak concerning our energy supply, and so on. We must change very quickly the things, the way of thinking, and to be more concentrated on the real problem of the world, of the real problem of our region, and of the real geopolitical risk they are in the doorstep here in Ukraine. We are glad that Ursula von der Leyen and the World Commission have new messages. We are under that new messages, and we want to act under what they propose, because also for us to be more strong defensively, to have much more competitiveness based first of all on less on cheap energy. It's an important goal. And what we want for the next few months and for the next few years is, of course, through the digitalization, because digitalization is important. We have the so-called e-factura, SAFTE, and other digital programs, and we improve a lot the collection of taxes. We want to have stability or less instability in our country, with much more social cohesion. And just an ending remark: we are all patriot, and we are all sovereignist in all these countries of Europe. Also the Bulgarians, also the Croats, also the Estonians or the Hungarians, the Czech, the Slovaks, the Polish people. We are patriots. But on the fiscal side, or on the side of, on the view of Minister of Finance, to be patriot, to be sovereignist, means to use your money if you have your own money, and Romania has his own money, and to pay your taxes at the deadlines. And if you pay your taxes, you respect the rules, and you use your money. If you have your money, you are a patriot. You are a sovereignist in a way of in an approach of Ministry of Finance. Thank you.
Thank you very much. Very interesting. So
Thank you.
it's good. Wasn't expecting such political speech from the Finance Ministry, but it's very interesting to start off the discussion there. So turning to you now, Sergei Stanishev, Bulgaria, what's happening?
Well, I think what's happening depends a lot on what's happening around the world, because we are very small and we are strongly influenced by the big picture. So I would like to focus first on this, because, man, we all know that with the coming of the second Trump administration, the world is changing drastically. And he's very clear and predictable in what he wants, the President of the United States. First, to make America great manufacturer powerhouse in the world. Hence, the trade wars, tariff policies, etc. Second, to focus on the big picture in competition with China, which means to close all conflicts which are draining resources from America, like Ukraine, Middle East, etc. And third, conservative revolution in America. And I'm following very closely the European reaction. Unfortunately, it reminds me in the last weeks more of this movie by Bob Fosse, All That Jazz. There is an essential sketch there where a comic is trying to present himself, describing 5 stages of grief. First is denial. The second one is anger. Then comes bargaining, then depression, and finally acceptance. And I'm wondering where we are as Europeans in this changing world. Maybe in a bargaining phase, closer to depression in a way. But the lesson for Europe is that we have to grow up and to see that we have to have our own policy as a geopolitical player and to come together. I'm not quite confident if arms race and military deterrence is the best direction, because there is one thing, not that we don't have to provide our security, but the one thing which is missing from European political landscape in the past years is actually diplomacy. And Europe was built as a project for peace. Now we want to be at the table of negotiations with Ukraine together, with a very good reason. But one could ask, where was Europe during the Istanbul negotiations? There was another chance also after a successful Ukrainian offensive in 23 to start negotiations from a strong point of view when Russian military lost. So this is a lesson to think about. But going finally to economic issues, especially for the region, there are good news. First is that since last year, Europe really woke up. At least there is a declared political will that we have to do something about our productivity, about our competitiveness. And apart from Draghi and the Letta reports, there are decisions of the European Council from Budapest. And now there is a competitiveness compass presented by the Commission and a number of legislative acts, and they're focusing on few key issues. First, competitiveness, investment, innovation, and this is very positive. Now we have to see if this political will be implemented into actions, which is a challenge for Europe always because we are slow in our decision-making process and we have slow in actions, and we don't have much time to lose. So the window of opportunities is relatively narrow. The second good news is that the erratic, very often, policy of the new US administration in economic fields, there are new possibilities for Europe. Because first of all, we are having more than 70 agreements for trade and cooperation around the world. And many countries in the world now are seeing that the United States are treating them with some bullish attitude, arms twisting, etc., and they want some predictability and respect. I think Europe should step in here economically, in Africa, in Latin America, and in other areas, and this is a big possibility for the European Union. The same about the investment process. In America, there is quite a big instability and investors are looking around. I have this feeling, at least this is what the media reports are saying. And now I'm coming finally to our region, where we are. We have to change our attitudes towards the European Union decision-making process. Because both Romania and Bulgaria, as a relatively new countries, are still in the mode of either executors of decisions who have been taken by Brussels, or victims of the same decisions. Now, with shaping the new European policy, we have to be proactive. And I would like to see the governments both in Romania and in Bulgaria to start public debate about our competitiveness compass and how do we integrate into these European challenges and to make it together. Apart from the discussion in our societies, the countries in the region, Greece, Romania, Bulgaria, and then broader in the Central and Eastern Europe, have to put our agenda at the European table when we shape the new policies. Because otherwise we are too weak individually. We're too small. So let's work in this direction in order to become really more successful. For me, there are clear priorities. They are evident. First, the European market has to be accomplished. In energy, in telecommunications, in the capital market union, and mobilize savings for investments. This is not done, and this should be the number one focus. And for the region, I think we're still having a big problem with regional infrastructure, connectivity, and all other elements. Plus, of course, we have to catch up on the new areas of developments. But I would say priorities for us should be demography. A consistent demographic policies for all countries in the region is a big problem. Education skills, because this is the potential which we are having, but we have to step up on it and develop it much further. Last point about Bulgaria. Last year when I had the honor to be present at your conference, Romania looked very well. A country with stability, predictability, a serious partner of the West, within the West, of course, and Bulgaria was a disaster. Had 6 elections in a row without clear perspectives. Now we finally have a government. I hope it will stay long enough. And we are on the path to the Eurozone. And I think this is positive. There is, because we are a country in a currency board, we don't have monetary policy for more than 20 years anyway, 25 years, even more. So our transition should be much easier. I have only one concern, is that the public is not aware and there are fears created through political speaking. And if there is no very active public campaign by the government and very good organization to address the concerns, the expectations for inflation, it may happen. Not that there are any objective reasons, but things happen in the economy because many businesses are already making their calculations about big profits. So we need strong organization and we have to work together again in the region in order to be successful. Thank you.
Thank you very much. Over to you now, Alexandru Nazare, from President of the Pan-European Union of Romania and board member of the Central Bank, National Bank of Romania.
Thank you very much. I'd like Your Excellency just to recall one of the moments, so several moments in which Romania and Bulgaria worked together and it worked just fine. So first of all, it's Schengen. We eventually made it. This means a lot for us. We didn't imagine, we worked so much, 11 years almost, and we missed so many opportunities by not joining. But when we joined forces, we succeeded, and I'm look forward for the visit of the Minister of Interior of Bulgaria tomorrow in Bucharest. We will discuss strategies towards the Black Sea. Second of all, one second example, very important. We've been together in the same coalition that won hosting the European Cyber Center in Bucharest. The person in Bulgaria that supported our candidacy is exactly the Prime Minister of your Prime Minister of today. And this coalition succeeded, and the mindset behind was to have the cyber center here in Southeast Europe. This is how we started the game. It worked. So what we need to do, we need to completely rethink the way we act within the European Union, the way we build coalitions, and these coalitions should be made on very clear national economic interest. And maybe, and that's very important coming back to our discussion, maybe we shouldn't look anymore at the economy as a secondary issue, because in true I'm talking about Romania now. When we will start to treat economy first, things will start to look different. And Romania remains a fantastic investment destination. And this is, I try to complete the speech of the Deputy Minister, a fantastic investment destination. It's a prime destination. And I'm not saying it as a Romanian representative. The Deputy Minister is not saying it. The figures are saying it. Which figures? FDI figures. Because if we look at the stock of FDI, 118 billion our stock today, 71% of this stock is equity and profits reinvested. 71%. If we look at the FDIs in 2023, we have 4.9 billion reinvested profits out of 6.9 FDI during that year. So what is this telling us? That the investors that made the leap, made the decision, invested in Romania are very happy. They are reinvesting. So our bottleneck is to convince them to come over, to have a consistent government strategy and one-stop shop for FDI that would act in, real-time world with real speed in order to convince them to come over. And one more thing regarding the approach of the Ministry of Finance in general, and not only Ministry of Finance. We should change our attitude towards forecasting. We should stop forecasting in such an optimistic manner, because we usually forecast growth higher or much higher than it is. It's not helping. Which was the last year when forecasts were actually above? 2021. What we did in 2021? We made a budget of growth 4.3 and the actual growth was over 5. was very good. Then, what happened in 2021? The deficit it was much lower than the deficit before and all the deficits after. So another very important thing, it was the year in which all rating agencies increased the perspective to stable. So that helped us to increase perspective. So forecasting better is actually helping us to change the image of Romania in the eyes of the rating agencies, which happened, which we all know this changed today. So Romania remains has the fundamentals to grow, and in nowadays Europe, in which coal and steel is now AI and blockchain and digital, because this is our today's coal and steel, we have a very good platform to grow. Thank you.
Thank you very much. Okay, now turning to our business panelists. Omer Tetik, Banca Transilvania, over to you.
Thank you very much. Thank you very much for the invitation and for the organization. And it was a pleasure listening, at least Mr. Secretary of State and Mr. Former Minister of Finance, because I will also continue in the same line of optimism, and as His Excellency said, in the same line of, let's say, pro-European maybe approach. The thing is that Romania, not only Romania, actually all the region has shown incredible resilience in the last 5 years. We have seen pandemics, we have seen war, inflation, volatility, energy crisis, everything which could have been written in an economics book, we have seen in a very short period of time. So, be it Greece, Turkey, Poland, Romania, Bulgaria, we are always, mentioned as emerging markets. I never saw one of them emerging or being emerged. But I guess also there is some unfairness in that. But on the other hand, I will say that definitely we are adapting markets. We have incremental, but every year we had been, let's say, closing the gaps compared to our Western counterparts. I have seen also in one of the titles you put at the screen, citizenship through investments. I guess this is indeed using the opportunities already mentioned. This is the moment when Europe can show that Southern Eastern members of the European Union are really European citizens, also putting more investments, putting more attention, including us in their big boys club, so that we don't just remain as spectators. But indeed, when we look at the problems Europe is facing, from food security, energy security, demographics, Romania itself can be solution to most of the problems, creating its own solutions as well. Coming back to what Mr. Secretary of State said, yes, we need to pay taxes, and the banking system, very profitable bank system, had been a big contributor of the state budget, not only financing through bonds and other instruments, but also paying taxes. Banca Transilvania group last year paid more than 1.5% of all taxes on profit paid in Romania. So this shows that a resilient banking system can be a good contributor to the state budget as well. I guess the region itself is a good opportunity. We have here also my competitors, our competitors, but still it's a good opportunity that this time we have a banking system very solid in terms of capitalization, liquidity, and willingness to grow. And we are not, counterparts, we are partners in economic development, and we want to assume this role further, not only for Romanian businesses, but any businesses who would like to invest in Romania.
Great, thank you very much indeed. So turning now to Georgis Athanasopoulos, Chief Executive of Vista Bank.
Thank you for your kind invitation. I will remain with the side of the optimist.
Mike, is the mic working? Try.
Is it working? Please, I have a strong voice.
Yes, shout.
So, as I was saying, I will stay with the side of the office because Romania is a great place to be. No matter what, it's not only the numbers, it's how the international community perceives the country. Thank you.
Thank you.
I'm here the last 16 years, and I noticed a significant difference. When I came, Greece, that my origin country, had GDP greater than Romania. Today, there's a difference of 80 billion euro in favor of Romania. And in the region, we have a paradigm. What the government needs to be done, and what the governments should avoid. In Greece, for example, until 2019, we have the experience of what the political class should avoid. We had IMF, we have austerity measures, the country lost 25% of the GDP. In the contrary, from 2019, the last 5 years, as the other speakers said, there happened a miracle. Because we have a strong political will, we attract investors, we diminish the tax rates, we attract technology. The biggest data centers now in the region are built in Greece. We innovate in the public sector. A lot of things now in the public administration are done electronically. And I'm coming back to Romania. Romania has a lot of advantages. It's a very big country compared to the other regional countries, has a lot of resources that is scarce to find in other countries. It has skillful people. We are discussing now European level that we are missing skillful people, talented people in order to make the extra mile. Romania has a lot of them and needs to maintain. We need to avoid another brain drain like happened in Greece. We are participating as a bank in career weeks with the universities. And where we are asking to the young people that are finishing the college, they are saying, okay, yes, it's nice to stay here, but I will explore also a possibility to work abroad. Why this to happen? Why to lose these people? How will Romania and the other regional countries will perform is also connected to what happened in Europe. We are entering, I believe, a new era. And I believe the Trump administration will help finally Europe to wake up. There is no any more free lunch. We cannot depend on cheap energy from Russia. We cannot exploit further Chinese markets to export goods. And of course, we cannot depend on security to America through NATO. All this, the tariff war and all these kind of things, I believe they will wake up the political class that until today didn't give a very good reaction, but now they see the clear message and I believe they will done accordingly. Europe is a very big continent. It's a developed continent, but we not rely on the glory of the past. We are overpassed by the evolution of things. We are far behind to innovation, to artificial intelligence. 1/3 of the companies that produce innovation in Europe are leaving Europe. 1/3 is going to United States. Why happened this? Because the environment is not friendly. We have a lot of regulations. We have complicated procedures for this type of companies. And of course, because the capital flies, they are exiting the market. But still, there is a lot of hope, I believe. The report of Draghi, Wake Up Europe, certain measures have been taken, and we need to remain in the optimist side.
Thank you very much indeed. Over now to Paul Dieter Kilanaru, Chief Executive at CITR.
Thank you. I guess this mic works, so it's going to be easier for me. I was listening a lot to everything that was said today, and I would frame it in total as one a very key expression that I heard, which was if you want to recuperate, you cannot lag behind in a lagging situation. And I think that's the case and the way we should look at Romania's evolution. But let's start with the good things. As was stated before, we've got a median growth of around 3.6% over the last 10 years, which is much better than most regional countries in this area. The only outlier being Poland with 3.7%, the rest are under 3%. So Romania does look good in this aspect. There is a certain price to this when we look at the export deficit and the way this is affecting our economy. So there is a price being paid there through deficits, both from a spending perspective and also from a commercial balance perspective. But still there's growth. And I think that this is the context in which we should look at Romania in the present and in the future, but also understand that when you're ahead, your main concern should be how to stay ahead, because progress is not a linear process. So then I'd go over to the risks that we see. Growth is projected at a sub 1% rate by some institutions for this year. So this should hopefully be just a hiccup in this median, because 3.6% is good, but then again, we are the ones coming from behind and trying to close that gap. So our rhythm of growth should consistently be higher than other countries to really be an emerging economy at some point. Secondly, we have to take into account foreign trade and how that influences us. Main partner of Romania today is still Germany. So the way that the German economy is going to work is going to directly affect Romania as a whole and businesses specifically. This also given the fact that we have a lot of businesses in Romania that need strong problems when they are fully dependent maybe on one or two clients from the German industrial area. So that means that even a partial reduction in production in that area can mean a total closure in the plants that we have over here. We've seen this in our restructuring business last year. A couple of companies just going from a stable situation to net zero just by losing the main client. So this dependence needs to be treated not just in the relationship with Germany, but in general relations between companies in Romania and other markets. These aspects can be viewed in two ways. One, it's the granularity of companies in Romania, which need to get bigger to be able to access economies of scale and also not be so dependent on their clients that they come to a point where just one single economic decision by another party can terminate a maybe 20-year-old business. The other thing that I see in the risk sector is inflation, which is still high in Romania and one of the highest in Europe. We need to take that into consideration both in the way we project things, but also in the way that we address our economy. We've seen a reduction and we've seen the efforts in this sense, but still, statistically speaking, we are at the lower end of the EU. But it's not all negative. I think that one of the main positive aspects was mentioned before. It is Schengen and also OECD. I think that the way Romania is seen by investors and economies is very important. That's why also I think that addressing the aspect of ratings is something that has to be taken into consideration. I think that the relationship between these ratings and deficits and also the way we plan our economy and execute on that is very important. And this takes me to the next point. We have seen quite an important deficit last year. We have already a high deficit in plan for this year and also a certain intention to reduce it. So if we look at this from the way we perceive the future of our economy, we should look at how this is going to happen. Probably, in our opinion, not as much from the cost side, but from the revenue side. So that means that we might see some impact on fiscal measures. But from this table, there are people who most certainly know better than me about these aspects. The last point I would make, and then go over to my conclusion, is labor. Labor is both a positive and the negative aspect that we need to take into account. We have low unemployment, but that also means that we have areas where employing the right kind of people is hard, and also pressure on employment costs. There are estimates that say that just this year we need to import, let's say, over 100,000 foreign workers out of the European Union in order to be able to answer to the needs of manufacturing and other areas where we have a deficit in employment. All these being said, I would conclude that there are two main aspects that we need to constantly be monitoring and, if possible, incentivize in order to keep up with growth and address these problems. First one is performance, core performance of companies. We are still at a very high level of lacking either financial or core performance. 25% of companies, big companies in Romania, don't produce profits. Also, 1/3 of them have at least one financial disbalance that should be treated in order to regain a level situation. Second is financing. The way we are able to fuel growth and the way we are able to fuel the economy is very important. Right now, we are in a process of trying to catch up with more complex systems that address financial needs. This means having a more broader sense of where monies come from. So it's not just the backbone that has been for the last 20 years, which is the banking sector here present, but we are also talking about financial markets, like the stock exchange. We are talking about direct investments that were mentioned before. I just like to add that sadly we have seen a reduction in FDI in 24 as of 23 of we've reached I think 5.7 billion as opposed to 6.8. Percentage of the GDP is still low at 1.6. Also, if we talk about direct investments from private equity as funds, we do not have very clear data as not all transactions are being tracked. But percentage speaking, we have much lower levels than Europe as a whole, Western Europe specifically, but even other areas of CEE. And to conclude, in order to access this private equity, which is, in our opinion, very important to address both distressed situations, where our main concern is as a restructuring company, but also growth, you need to incentivize the way that people funnel money to those areas. There is capital in Romania, both from pension funds, insurers, and a lot of other sources. But the way policy drives this kind of financing to go into private equity investments can ensure a competitive advantage for Romania and address these opportunities that were mentioned before, because any growth needs capital, and that capital needs to understand this context to be able to come towards us at a higher rate. Thank you.
Thank you very much. Very good. Over now to Mihail Ion, Vice President, Capital Markets, Investment Banking and Personal Financial Planning at Raiffeisen Bank, Romania. Welcome.
Good morning and thank you for having me here. Indeed, I concur with what was already said about the convergence of the Romanian economy and the potential to put things here a bit of a longer-term perspective. Romania had the fastest convergence after the EU accession, and now we may say that the GDP per capita measured through the purchasing parity terms, it's already 80% of the EU average. It's already at par or maybe better than other countries in the region, or even closer to some older member states of EU. So a very strong convergence indeed, which I think it's visible everywhere. And when it comes to the potential, indeed, we have, I think, a lot of room to continue to grow and develop. And here I will mention the investments in infrastructure, which will support future competitiveness of the country. I think that it's very visible that Romania is a huge construction works and the infrastructure is developing. I would mention also the relatively skilled labor force when it comes to IT and the technology engineering. Also the geographical position of the country. So we may play a sort of regional hub role for goods which are supposed to be delivered to EU or to Asia. And in this context, also speaking about the geographical position, I think that following the COVID tendency to favor nearshoring, free and friendly shoring, again, Romania has a very competitive position. Last but not least, the reconstruction of Ukraine, hopefully the war will end soon, which may also act as a catalyst for the growth of Romania, as we may play a sort of regional hub for that. On the other hand, I think that what brought us here is not enough to help us to continue on the same path. And we need to improve definitely the competitiveness in order to avoid the middle income trap. So we still have, I think, bit of an advantage when it comes to the labor cost, but it's diminishing. And on the other hand, we are not very as competitive as the most advanced economy. And maybe I forgot, but it was I was happy hearing during the first discussion of today as also support rationale behind of our growth. Also, the fact that Romania is self-sufficient in terms of energy, so we have everything we need to produce, and we will produce more on that. Then on the competitiveness, so there is a need indeed to progress on that. And regarding the what we can do as financial sector, because yes, we have a very strong foundation when it comes to the financial sector in Romania, be it equity one or banking sector. Yeah, we are very, very well capitalized. We have a lot of plenty of funds available, very well governed banking sector. Indeed, the lending will support the growth of the businesses. I would say that also the criteria we use when extending loans are also supporting the competitiveness, because we do a positive selection and we highly appreciate companies which are very well governed, transparent. We, of course, reward the accountability in the way the business is conducted. I think that also the financing provided to the infrastructure, be it on the maybe the telecom or energy, will support the competitiveness of the economic environment. Also, I think that the support provided to the consumer through lending, indeed, it's also, and through savings as well, will provide support to competitiveness. Also, various, I think, initiatives launched by the banks to support the business environment. There are many banks, included ourselves, developing a lot of programs for the startups. We also have a program to support mid-sized companies to scale up across Europe. So I think that the financial sector is indeed paying its contribution. When it comes to the public policies, I will mention maybe two to three major things. From my perspective, the first priority is to restore the macroeconomic stability. That will severely, I think, increase the credit worthiness of the country and the trust of the business environment and the investment environment. We have a very high budget deficits. Indeed, there are coherent plans to address, and we need to follow those plans. Second, I think it's very important to leverage on the EU funds. Be it the traditional EU funds or the reconstruction and recovering following the COVID. This is a huge opportunity for Romania we cannot afford to miss. And it was also the discussion during the first part of the day about the progress needs. Europe needs to on the simplifying the regulation and so on. This is very much, I think, valid for Romania. We need to improve or to reform the public administration and to reduce the bureaucracy in order to let's say, reduce the way or to ease doing the business. So I think that, in a nutshell, there are, of course, there is a huge potential and opportunities. There are also challenges. And I think that when, let's say, picking only one single macro indicator, which I think captures what I was already said about the competitiveness last year, we had a very huge increase in demand, fueled by strong fiscal stimulus, but the GDP growth of Romania was very shy, below 1%. So there is a clear, in my perspective, evidence that the local demand needs a stronger offer to meet, otherwise, indeed, we import more, and here comes the twin deficit. So that's in brief from my side. Thank you.
Thank you very much indeed. So now, last but not least, Mr. Lianu, welcome.
Good morning, and thanks for having me here. I work for a state-owned bank, which in 2020 started a major modernization and growth agenda. Timing was, I would say, strange. It was just about the time when the world, started to go crazy. We had the pandemic. Then in 2022 we had the war, and now we have this instability all over the world with certain themes that are, changing pretty much everything we took for granted. So what we've learned from this time, these 5 years, is that it's much more important how you manage to answer the challenges, because it's almost impossible to foresee them. Of course, we are all making plans, backup plans, risk scenarios, and everything, but every time is different. I mean, it's like you're preparing for initially for a football match to be the best in football, and then the next day your immunity gets challenged, and then you start changing your diet, and then the next day you have to fight a bear. So it's always changing, and if I can make a parallel with what economists are doing. Most of them can actually foresee recessions as they are approaching, but it's very, very difficult to predict the depth of these recessions. Why? Exactly because you don't know the response function and how people are going to react, not just the governments, but also companies and population. So I guess the key to resilience is how you manage to integrate this response, to change your response function, to integrate what is coming from the world, because the world is changing faster and faster. So the key to competitiveness is how you can actually get your bureaucracy, because you need it, get your bureaucracy smart enough, flexible enough to actually be able to respond to those changes once they arrive, because you cannot foresee them. This is what I think of the world, and in particular, talking about Romania and Europe, I believe that for us the chance is to be able to respond together. I mean, we have this unique position whereby we can pool forces to be able to become much more resilient as a group. We have no chance alone. We're just too small, each of us. But if we join forces in this common market, I believe that this could be the key to resilience, because it would allow a fast response to whatever happens outside. We could together specialized. You cannot become self-sufficient as a country, but you can become self-sufficient, for instance, as an economic bloc. So if we can find ways to actually find fast responses and resources to whatever happens in the world, I believe this can be actually the driver of development for each and every country in Europe. Otherwise, we're just too small.
Okay, great. Thank you very much. So I think we're fast approaching our coffee break, networking break. It's 11:10. I think we can take anyway about 10 minutes. And yeah, I'm going to now open up for some questions from the floor. I have a few myself as well. Now, I have a bit of an impediment that I have this kind of pillar here, so in the middle. So I can't see everybody, but if you have a question, please stick up your hand. We'll have somebody with a microphone. I can see one question here. And so there's microphones on all sides of the room. So just indicate, if I can't see you, one of the team will point you out. Just please introduce yourself, who you are, and ask your question and who you're addressing. Thank you.
Well, thank you, John. Domagoj Juricic from Croatia. I'm speaking here as well. But one question that really pops up my mind today. You know that German Bundestag is set to vote today on a proposal that aims to relax the constitutional debt brake to allow increased borrowing for defense and infrastructure investments. And let's talk about the risks of this move. This easing may encourage others in the EU. It can trigger negative reactions from the financial markets. It can add to inflation pressure. It can complicate ECB efforts to stabilize prices. It can affect borrowing costs. It could impact negotiation on broader EU fiscal policies like Reform, Stability and Growth Pact. I want to know from whoever wants to intervene, even each of you, what do you think about that move and what do you expect it may trigger in the EU? Thank you.
Thank you very much. So what I'm going to do is take a few questions, give you a bit of time to think which ones you might like to answer, because we don't have too much time. So you have to pick and choose which one to answer. I think Mr. Orășanu is, yeah.
My name is Răzvan Orășanu. I'm from an NGO, Up to Us. Trade wars. I was amazed not to see more talk about this. Do you see trade fragmenting and growth diminishing in Europe? Or do you, as Joan Hoy pointed in her introductory remarks, do you see a great deal of resiliency in the face of these trade wars and actually not a lot of sluggish growth following that? How do you see that for our part of the world? Thank you.
Thank you. And Mr. Chonga?
Victor Chonga, a question for Mr. Stanishev. Do you think that the proposal you made to aggregate some of the countries here and discussing with EU will have a chance in order to help the regulation of some sectors which increase prices, costs for the European companies and decrease competitiveness? For example, the price of energy in Germany is almost 4 times the price of energy in the United States, and this affects everything. Thank you.
Okay. I can't see any other question, any other hands? No. So I'm going to throw in a couple, and then I will ask each of you and just address one or, maybe two max. So I was struck that a few themes came up from more or less all of you mentioned, certain things. And one thing that struck me was the emphasis of some of you that Romania and Bulgaria not being real players in Europe, and somebody even referred, like spectators rather than real proactive members in the EU. And I think it's an important point because it also pertains to the perceptions of the population about their own country and the role it's played, and also has an impact on the view of the population of the EU as well. Maybe the EU is not as popular now in some of these countries as it used to be. So I just wanted to ask you about that, just to elaborate maybe on what Romania, Bulgaria should do or could do to play a more active role. The second thing was about a lot of comments about external perceptions of Romania, with reference to the political instability, with reference to the kind of return of, are we seeing the return of twin deficits, in a serious way, as we had before the global financial crisis. I mean, if the country is growing rapidly, I don't think that running, fairly large current account deficit is that bad. But if you're running very large current account and fiscal deficits, then, persistently, then obviously that introduces a big vulnerability. So are you worried about that? Some of you said you were worried about that, and we need to see a restoration of macroeconomic stability. And obviously it affects the view of the country. And the final question is which I was going to ask, and then somebody mentioned the middle income trap. Is Romania at a turning point now? I mean, it did have this very rapid convergence, very impressive, catch-up growth, a magnet for foreign direct investment, with a very large stock of FDI now. But has something changed in the last year or two? And might that become, more, might that linger as a problem? But if Romania is at this point of, reaching or approaching this kind of middle income trap, how can the country avoid that, or what should it do? What are the kind of key things it needs to do to avoid that? So those are my questions. So I'm actually going to start. Please don't try and address everything. Just, I'll start here because it's been a long time since you got the chance to speak.
I pass the possibility for the others.
Passed it? Okay, Mr. Stanishev.
Thank you, John. I first of all think indeed Bulgaria, Romania, Greece, countries of Central and Eastern Europe should cooperate more, because if you look at the Draghi report, 238 organizations has been consulted by the authors of this report. None of them from Central and Eastern Europe. So it's very much West-centric. This is why we have to put our demands collectively at the table and fight for them, including in energy area. I think one of the priorities that there is a bottleneck. Our region is energetically isolated from the common energy market in the European Union, and we have to demand these grids, which is a common benefit for all the European Union, to be accomplished in order to equalize the conditions for our economies. Secondly, on the trade wars. Of course, EU is depending on this, because if for America, now 26% of the GDP depend on trade, for EU it's 44%. But I mentioned there are opportunities. Generally, there are no winners in trade wars. US will gain something through the tariffs, but their producers and their consumers will lose. It will reflect on them. It will backfire in many ways. But Europe has a great potential for the rest of the world, as I mentioned, because the rest of the world is looking with a greater interest to Europe now, with a change of attitudes from the United States. So let's use it and step in through investments in Africa, in Latin America, in other parts of the world, and develop our possibilities. And the last on the fiscal policy, I've seen it also in Bulgaria in the last years, because there was, as I mentioned, political instability. Parties were buying voters by increasing social spending, which is necessary because we are a low income country, etc., or medium income country, and it has to grow. But when you make it in an irresponsible way, then you face the reality then at certain stage you have to squeeze. And as as citizens and consumers, we know what it is to live on fast credit companies. It looks very attractive for short term, and then you pay double and triple, and it ruins you. So I don't like very much this change of attitude in Germany, because the aggregated public debt of the European Union is above 100% of the GDP already. And the tendency, it very easily goes out of hand and out of control. We have to be cautious, and we have to spend, when we spend more, on something which is increasing our competitiveness and productivity, and not just spending money without economic effects. Thank you.
Thank you. Mr. Nazare?
Well, I just want to talk a little bit about this point about raised earlier about our convergence speed. So it's true we've been quite ahead of many other countries in Eastern Europe especially towards this convergence, from 30 to almost 80%. And the question is, what's behind this convergence? And my answer to this is very simple. We are celebrating this year 20 years of flat tax. It's not ideal, it's not the same, but the flat tax in Romania was that invisible thread that kept interest and of investment alive, and was a very important and predictable factor for investment. And I think for the very near future, also for the future, we should keep this philosophy. It worked. We don't need to make experiments. This worked. It helped us. It helped us to be ahead compared to others in the region. So it was a competitive advantage that we should keep. Regarding the trade wars, yes, of course, there's no winners in trade wars, but we should stick to all the resilient factors. And this is a window of opportunity for Europe. And now in Brussels and in all circles, whenever they want to speak about a big project, they talk about a pan-European project. And basically they return to the initial doctrine. It's a 102 years doctrine that eventually saw Europe with one united defense, with one united foreign policy, and with one united economy, and without trade barriers. So we are getting back to the initial project, and we eventually realize that we very fast forward have to work to make it, to eventually finalize it, because it's unfinished. And this would help us to protect from any trade wars, increase the security, increase the deterrence, so increase the global position of Europe as a continent. Thank you.
Thank you. I should have said as well before we turn to our bankers here that it'd be good to hear from you, if you don't want to take any of those questions from the floor, what you see as the priorities for your sector, but the banking sector in the coming year. I mean, you have talked about this a bit, and about also expansion of financial markets more broadly beyond the banking sector, but what would be the priorities for you? But also feel free to answer any of those three questions.
And I know that in the interest of time we should be
brief. Yeah.
Brief. But coming back, yes, we have seen last week the yield curves of all Europe has jumped up. But actually, this was the good news. Suddenly, it was also Germany was investing, or the leader of European economies was investing. So I'm looking like a banker investing a balance sheet of any company. So it's important what Germany and Europe will do with this one, because investors, at the end, the initial reaction is also a bit excessive. But on the other hand, investors, banks will definitely analyze what is happening, what is being done with the excess money being borrowed. So if the expectations are with a positive mood, with a positive trend, then the yield curve, the yields themselves will start coming down. I mean, it's not important how much, definitely important the amount of money borrowed, but what you do with this money. I mean, if a company comes to ask for a credit from BT, we are asking the purpose and let's say reimbursement source. Here, definitely we are also a big fan of, in Romania at least, the fan of unique taxation, the flat taxation, because this was one of the very few items of predictability which it offered. I guess, especially for Romania, we need a lot of discipline and predictability, not more taxes, more collection, more attention, more digitalization. This is an opportunity. If US administration is using now the terminology of playing cards, I think there are new decks at the table now, and Romania, Croatia, Bulgaria, we can grab a good hand in this, investing more in AI, investing more in digitalization, investing in manufacturing, where we were already strong. I mean, we are traditionally legacy, we are industrial and manufacturing economies. This is a big opportunity for us to become, if it's about onshoring, European onshoring, we can become this supplier of the rest of the Europe. And we have human resources for that. We have willingness of population for that to be active. We have hardworking populations. That's why I think we have a lot of good opportunities. I hope we will be able to move all these cards well now. About our expectation is the, I don't want to necessarily speak on behalf of the banking system, but I guess more or less we are aligned. Definitely, we would like to see, more simplification and deregulation. Deregulation is not necessarily that we are against capitalization or strong prudential ratios, but Draghi report, if I'm not wrong, was published beginning of September. I have already physical pain discussing that the report exists. I mean, I would like to see European regulators, banking regulators, coming that we took these points, this we liked, and this is our action plan. This is what we did. So at the anniversary, whatever date it is in September, hopefully we will be able to see some progress, not just agreeing again on another platform, on another forum that what the report mentions is right. I mean, there is a lot of willingness to mobilize. I hope there will be also some results to this. We are very much interested in development of capital markets union, and also free movement of capital within Europe as a beneficiary, but as an investor as well. I think there are a lot of, again, serious discussions that it will, hopefully we'll see some light at the tunnel that we can also grab that it will happen. And especially coming back to Romania, we had been a pillar of stability in the last couple of years, politically, economically growing fast, although below potential. I guess possibly also the central legislation will give the chance to continue this trend. We are definitely positive and committed to that.
Just to say, unfortunately, Mr. Raduly has to leave us, has to get back to the office, I guess. Thank you very much. So let me turn, Mr. Athanasopoulos.
Yes, as I said before, we are entering a new era. Answer to your question about Germany, I want to remind, a few years ago, Germany was actually showing the finger to our region about fiscal discipline, keep the inflation rate low, not to increase public debt, not to have deficits. And in a few years, we say 180 degrees change. Now they are going to vote during the week to allow the limit to grow in order to spend in the next coming years 1 trillion euro. It's an amazing amount. It's only Germany. It's for sure that they will follow the other European countries. This can create inflation? In principle, yes. And together with the trade wars, it's another stone on the pile. But we need to learn from history. Whenever happened this, and the history can show to us, the economy entered a recession. We saw it during 1920, when again we had tariffs, and what happened? We have the biggest recession in the United States that actually came to Europe. There are also solutions, investing, that we are missing investments, and also to avoid to inflation. There is the discussion to have a European bond and not even every country to raise money. So this will make the raters to be more comfortable and will distribute the risk all over the European Union. Coming back to Romania, we said a lot. Yes, it's a place to be, but so sure we need to address certain things. We need fiscal discipline. That is a very important element. We need predictability. This is what the investors worldwide they are looking for. Despite all these facts and despite the current situation and the geopolitical risk, Romania still continue to attract investments. We have seen it to come factories from China with meat productions that they want to be towards close to Europe. Now we have the necessary infrastructure in progress that make the things to become easier. And we have one of the most robust, and don't take me wrong, we have one of the most robust banking systems in Europe. Our banking system is highly capitalized, very liquid, with very good return on capital, and ready to finance all viable projects. So this is something that can create value to the country, can improve the growth of GDP, and also improve the financial intermediation. We are here, some banks that they have, in reality, 40% of the market. There is a lot of potential. We need to explore further the capital markets. We need to move forward from the traditional products. I give a loan to a company and perform the activities. We need to guide them to take money from the capital markets and to issue new instruments, more sophisticated instruments, that they will make the life of participants easier.
Thank you very much. I realize I'm keeping everybody from their coffee, so we should probably speed up a bit, but I don't want to deprive you of the chance to respond. So yeah, if you just choose maybe one main point that you'd like to make. So Mr. Kilanaru.
Sure, thank you. I'll try to be brief. I think that the question about investment in general is important. The way that Germany chooses to put this on the table today, and also the dynamics of how it's voted, basically it's voted by the former parliament because the new parliament wouldn't vote it. So that in itself, again, brings a little bit of unpredictability to how it's going to work. A broader sense of investment as a general, I think it's the only fuel that we can and have to use in order to accelerate some things and try to rebound from some positions. Even Romania has one of the biggest investment budgets in over 10 years, 7.8% of GDP, more than half of it coming through or around PNRR. So I think that the question, as Mr. Tetik says, is how you use the money, not if you should use it. I think that we do need to accelerate cycles of investment. I think we have to use more instruments of investment in order for each and every situation to be addressed well. Our expertise is restructuring, insolvency, and what happens at the middle or end of a cycle depends on what happens to the company. What we see there is a very, very important need of financing, but also of the capacity to understand financing, to understand what you need to change in order to be able to have access to money again, because what we've seen in the last 10 years is a very big dependence of certain companies from financing structures, either on the buy but also on the sell side. Credit from suppliers on one hand, credit from the banks even to be able to drop forward monies that are being obtained from commercial activities have made companies dependent on financing. So my final point is, if you are dependent on financing, if you want to raise the level of investments from state and private equity, you need to talk about business in a different way. That's something that happens quickly or can happen quickly, because building a new factory takes a lot of time. Learning the difference between turnover and NOPAT, or return on equity or on investment, can be done far quicker. But these are the kind of incentives that investors look at. We've been in a situation where turnover has been a word that you constantly heard in business in Romania. Why? Because we are a growing economy with a lot of inflation. So as long as you kept up the process, you are good. Now we need to look on specific returns, on net operating assets, on the way they generate returns so that we are attractive for investment. Right now, 1% of private equity investment is in CE, the rest is in Western Europe. To get that high, you need to be more attractive than the West to change policies to bring money in this direction. And I think we need to concentrate on that aspect. Thank you.
Thank you. That's very clear. Mr. Ion?
Yeah, on the public spending in Germany, indeed, there are potentially negative consequences. But I think that, if we consider that following the Second World War, Europe enjoyed the peace dividend and invested less in defense and provided more money to the social benefits. Now is not the case anymore, unfortunately. So there is a need to heavily invest on defense. So, and there are also economists looking at the multipliers of the defense spendings when it comes to the GDP growth. For a developed country, it can be somewhere between 1.5 to 2% to 2. That means that 1% investment in GDP, 1% of GDP investment in defense may translate in 1.2 to 2% GDP growth. So these investments in infrastructure and defense will act as a catalyst for the economic growth in Europe. And I think that, along with the growth in yields we saw during the last few weeks, also the European equities encountered a very nice price increases, not only, especially in defense, but not only. So that means then we will see some capital flows moving, let's say, from US to Europe because of that. So, and there are, of course, a lot of calculation how much each and every country should invest to at least reach 3% of GDP spending on defense. I would wonder without, let's say, what would happen in case Europe will not invest more in defense. Indeed, we need to find a clever way to fund this and to still preserve the macroeconomic stability. And regarding Romania, I already mentioned the need to preserve the macro balances, absorb the EU funds and reduce the bureaucracy. Maybe a few additional remarks on the fiscal path. And indeed, we should spend efforts to preserve the fiscal competitiveness of the country. Flat tax is one of the core part of it. And indeed, we need to improve the collections. We have, for example, a huge gap in VAT collection compared with Bulgaria, just to give an example. And then to also close the, let's say, opportunities to optimize the taxes. And probably to the large extent to adjust some other taxes.
Thank you. Final word to you, Mr. Liano.
Well, I just think we need to be pragmatic about everything. If there is some lesson out of the last few years, this is it, in my opinion. So if Pax Americana goes away, of course, Germany needs to invest in weapons. I guess, from a pragmatic perspective, the question is, for instance, where is the iron coming from? Where is the smelting being done? Where is the smelting for rare earth materials being done? Because right now, for instance, China has monopoly on that almost. Where are we doing our chips? Okay, we have the chip making machines technology in Europe, but the chip making process is something different. Where is our, chip making excellence? So, because at the end of the day, it's about being pragmatic about the whole value chain. If the weakness relies in the weakest link of the value chain. If you don't integrate the value chain, it's going to be difficult for the European bloc. And I guess the gold in the house for us is the customs union. So apart from anything else, poor regulations done by bureaucrats who don't care about the, practice, about the real situation in the field. Okay, but the gold is really customs union, and that should really hold, because if that goes away, it's nothing left. Yep.
Okay, well, please join me in thanking our panel. Very interesting discussion. Thank you very much.